let's welcome on board then Chakri Lokapriya on the show. Chakri, let's get started by stock-specific views. What's the outlook when it comes to the large-cap private sector banks? BofA has come out with their latest note saying that the positive outlook does sustain, so it's time to buy the likes of an ICICI Bank, HDFC Bank, Union, Canara, etc. What's your view?
Good morning. Thanks for having me. I think, what we buy largely depends upon, what the government policy unfolds over the next 2 or 3 months until the budget. And, it's unlikely to be a continuation of what happened in the Modi 2.0. Yes, some of the reforms in power infrastructure are likely to continue. But as far as the FDI is concerned, they will wait for the budget and then, because that will determine the earnings growth rates of banks as well as other companies as well. So against that backdrop, in the near term, the earnings are more solid for the PSU banks, SBI, Canara Bank. As far as ICICI and Axis Bank is concerned, there's nothing really changed to accelerate the earnings outlook over the next 1 or 2 quarters. So I'd still stick with the public sector banks until there's more clarity on the budget.
Okay, sticking with some of the public sector banks. Meantime, MGL is in the spotlight. 2 upgrades that have come in, very positive on the volume outlook. And then there's Cairns as well that seems to be catching the interest of the brokerages. What's your outlook on both of these candidates?
Companies like Cairns as well as, CG Power, these will clearly benefit from the semiconductor spend that is likely to continue to happen or rather accelerate over the next 1 or 2 years because, these are easy reforms. Defense, semiconductor, industrial, infra are easy reforms for the current government and the current shape to continue because, even the allies, for instance, Naidu is a very reform-oriented person. He's done good work in his state in the past. And therefore, you could likely see support. I think that's the approach, at least we are following, is where we can see allies supporting. And these are the areas that they will support. So Cairns, yes. But as far as gas is concerned, it's a more complicated subject.
Okay, fair enough. Chakri, what's your outlook then on some of those FMCG stocks? It's been a pretty solid week gone by. Do you believe that there's still merit in looking at these names?
All the new noise, which is favorable for FMCG because elections will kind of support spend in rural monsoons has been good. Oil prices have been in check, which will keep the raw materials of these companies favorable. So all these factors would kind of aid to the volume growth a little bit. So against that context, the usual suspects, easy to buy names, Hindustan Lever, Marico, those are the ones one can buy. But given the fact they've already run up in the last 1 week, wouldn't really chase them.
All right, wouldn't really chase some of those FMCG names. Naresh, let's get in a quick chart check. Do you concur with this basis the chart readings?
Which names?
FMCG, Marico, Dabur, HUL, etc.
I think in the short term, the trade is done. It was more a defensive trade which played out post the election event. And in that case, we've seen spikes as such. And some of these names like Marico and Dabur had already taken an up move before the elections, post the results. So at current levels, the risk reward is not great. So I would wait for a fade off. The structure has changed, the trend has changed. But if you've seen a Dabur go up from 550 to 630, a stock going up 15% in FMCG, we've seen historically we don't see 50% moves really quick or 20% moves also really quick. So one has to wait it out. So if we see a dip towards 580 on a Dabur, a dip back to 600, 610 on Marico, that's the price point I would look to re-enter. So I would expect some bit of a fade off. The only FMCG name which looks interesting is ITC, which has been sideways and has not broken out. If that breaks out about 445, that would be the best pick in the whole sector.
Okay, in fact, let's hear out what some of the top market men as well have to say about the FMCG pack. Is it positive with respect to the rural policy push aiding the uptake or just a momentary move? Let's hear out the view of the likes of Atul Suri, Sunil Singhania as well as Venugopal Gare on FMCG.
It was a laggard sector was FMCG. So it's not that there were any big build-ups or any over-ownership. This was a space where there was under ownership. And even to get to equal market weight, you will kind of have to see the kind of buying you're seeing today. So yes, there will be a need. The government will have new priorities. There will be some learnings, and the sense is that there is going to be a lot more rural push. Based on that, there is a pickup in FMCG spaces.
The only place we are underweight is consumption, because by nature we are a little bit value conscious, and most of the companies there used to trade at a slightly higher multiple. But obviously, in this kind of a scary scenario which is being built in, they are the ones who are doing very well.
The way I look at it is that if we were to still broadly view this entire short-term narrative, the short-term narrative is that probably there's going to be a lot of subsidies. There might be a change in terms of how government looks at budget, and that could essentially potentially push some consumption. So is FMCG the right way to look at it? Is the right sector to basically invest? I think there are other ways to invest. You could probably invest in autos for that. You could invest in consumer electrical durables, small value discretionary for that, because those are sectors which are relatively cheaper and have faster earnings growth than your FMCG. So FMCG is not like something that is you should be hiding in. There could be short-term trades around it. You should sell those trades.
Nikunj.
Well, short-term trades there, which actually need to be sold into. All right, just to shift gears again, and I'm just going to go back to PSUs. Naresh, for the moment, which is the strongest PSU stock you would say where the correction has over, the froth is out, and it is getting ready for a launch?
So we've seen corrections to be very sharp in the whole power segment as such. But if I were to say something which could be the next leaders going forward, would be more on the oil and gas space, which is names which have not seen a large up move. So I would like ONGC, which has finally recovered well from the fall, and going into elections, and even on the exit poll had not actually gone 8-10% as such. So ONGC would be my pick going forward. Second would be Container Corp, again for the same reason. It had not seen a massive move. The stock is back to 1,050 where it was 2-3 weeks back. It had seen a spike towards 1150. So my view is for some time at least, we would see a PFC, REC or the PSU banks not cross the highs made on exit poll, but could consolidate, and maybe we could relook at them a few weeks later. But for now, those names could go sideways after this recovery. But a new sectoral rotation could be names which did not see a very sharp move going into the elections or in the last 6 to 12 months. And in that, Concor and ONGC come into play.
Right, let's check in on those pre-open rates this morning. Is it tracking the moves that we witnessed on Friday afternoon? Well, certainly looking like that, although it may be a flat start for the Nifty, and the pre-open rate on the Sensex just about 500 points higher as we speak. Let's find out those mid-cap strategies then. And Kunal, what's looking good today?
So I'll bet on L&T Finance. I think that's a chart which is now coming back into a breakout mode. 167 plus is where the stock closed on Friday. Again, it has come back above the 50 as well as the 200 moving averages post Friday's move. So would suggest a buy with a target, expecting the stock to come back towards the previous major swing high breakout around 175, and stop loss could be kept at 164.
Okay, let's get in your mid-cap trade, Naresh.
So that would be a contra buy on Bandhan Bank with a stop loss at 190, target price of 220. The reason it's a contra buy is, if you look at it, the stock has gone nowhere from COVID. The lows in COVID were around 170, 190. The low in December 23 to March 23 was also around that. And for the last 3 months, the lows are around 170, 180. Yesterday, the stock crossed the highs post pre-elections. So expecting this to continue. A risk-reward trade, strict stop loss at 190.
Okay, thanks for running us through your top mid-cap ideas. In fact, Chakri, before we let you go, why don't we get some mid-cap recommendations from you as well? What is it that you're looking at as a promising opportunity within the broader universe?
If you look at the recent numbers from Adani Ports, very strong numbers. The port volumes continue to show economic recovery, and Adani Ports, therefore, Container Corp along the same lines will benefit from a continued recovery. And as we go into the next 3 months, these are easy stocks because of the policy here is likely to be easy. Battery is required in just about whether it's consumer or industrial or telecom. Amar Raja, battery development, is doing a lot of work in that space. Even after all the run-up, it's still an inexpensive stock trades about 14, 15 times. So still a long way to go.
All right. Thanks very much, Chakri, for taking the time out and joining in with your market take. Let's